Hi, everyone. We are back with another Trust and Estate Quick Tip, and today we are talking about taxes. How are limited liability companies taxed? So we refer to these as LLCs for short. So a single member LLC is completely disregarded for income tax purposes, both at the federal level and also in the state of Florida. And many other states are similar to that as well, maybe all of them. But Florida and the federal government completely ignore them. So if you have a single member LLC, which means that it has only one owner or one member, because the members are the owners of an LLC. If you have only one owner of an LLC, it simply doesn't exist for tax purposes. You don't file a tax return. You report all of the income in the LLC on your personal tax return, on your personal 1040 return. If it's a business, then you would report this like any other business income, which would be on a Schedule C, like a sole proprietorship. If it's rental real estate in the single member LLC, you would report it on a Schedule E, assuming tax returns are the same. I don't prepare them typically, so that's what it used to be called, a Schedule E. So it's on your personal 1040 return. So it's on a schedule, so on some sort of schedule on your personal 1040 return. You do not file a separate tax return for the LLC. Now, if the LLC has two or more owners, you do file a tax return for it, and you file a partnership tax return. There's no such thing as an LLC tax return, doesn't exist. An LLC is taxed as either nothing, ignored, called a disregarded entity, or it's taxed as a partnership. Or you can actually elect for it to be taxed as a corporation, but typically that never happens. So it's either going to be completely disregarded or you're going to file a partnership tax return.